Hello, this is Merrill, a tax tutor. Today I wanted to talk about an issue that we see come up very frequently with clients. It's an issue that clients think that they are doing something great to help them save money on taxes, but they're actually generating more taxes than they realize by doing this specific action. And that is issuing a 1099 to a child rather than setting them up as an employee and giving them a W-2. Now, the problem comes in that we have to kind of define what the difference between a 1099 worker versus a W-2 worker is. When someone is a W-2 worker, they're considered to be an employee of the company. When someone is a 1099 worker, they're considered to be an independent contractor of the company. The difference is how employment taxes are paid. When you are paid as a 1099 contractor, the person receiving the 1099 is responsible for the employment taxes on that income. Someone receiving a W-2 is the employer is responsible for withholding the employment taxes on that income. So you have a different treatment on how employment taxes are actually paid. And so now there are some risks that for 1099ing someone. So the very first thing before you can 1099 someone or issue them a W-2 is you have to figure out how they are classified, what type of work that they're doing. When you have someone that you can kind of control their behavior, you tell them what hours to work, you give them training, you show them what to do, you give them the tools to do the job, you do all that for them, that starts to be an employee and they're required to be an employee and be paid a W-2. When you have somebody that's an independent contractor, they can set their own hours, they can do the work on their own time, they bring their own tools to the job, a number of other things, then they can be considered a 1099. So our first issue is there could be IRS scrutiny. So if you 1099 a child and they should be W-2 and the IRS starts looking at it, they could say, hey, wait a minute, they're really a W-2 worker, they should have been W-2 all the time, you're now liable for all the employment taxes that have not been paid because they were misclassified. The biggest issue of 1099 versus W-2 is, as we've mentioned, is that self-employment tax. So 1099s are required to pay their own self-employment tax versus W-2, it's paid by the employer. Now, the real issue, the biggest issue here is when someone is required to pay payroll taxes and when they're required to pay to file a tax return. So a child that's under the age of 18 that's working in their parent's business, this can't be an S corporation, so it's a parent that you have a husband and wife that own a partnership, or you have a husband or a wife that have a Schedule C, or spouses that own a partnership, or one spouse has a Schedule C, the other spouse has a Schedule C. If you employ children that are under 18 years old, you don't have to withhold any employment tax as long as they are a W-2 employee. And as long as their income is under the standard deduction for that given year, they don't have to file an income tax return and pay any employment taxes. So as a W-2 worker working for a parent, not in an S corporation, you don't have to withhold employment taxes and they don't have to file an income tax return because they are under the standard deduction threshold. Now in 2024, that standard deduction threshold is $14,600. That standard deduction threshold goes up each year, so if you're watching this video after 2024, you could look up and see what the standard deduction is for that given year. The huge downside of 1099ing your child is that they are still responsible for the employment taxes. So as W-2 working for a parent, they're not responsible, but as 1099 working for a parent or anyone else, that exclusion no longer applies. So if you issue your child a 1099 for $1,000, they are responsible for the employment tax on that. And under the IRS rules, anyone earning self-employment income, which is 1099 income, of over $400 is required to file an income tax return and pay self-employment tax. Now, if they're under that standard deduction threshold in 2024, that $14,600, they're not going to owe any income taxes, but they are going to owe employment taxes. So if you give your child a 1099 and say it's a $10,000 1099 and you think you're fine because you're like, oh, it's under the standard deduction in 2024, $14,600, and you say they don't owe any tax, guess what? The IRS is going to send you a notice because they got a 1099 of $10,000. They owe probably about $1,500 of employment taxes on that. Whereas if they were set up as a W-2 and paid properly, they wouldn't owe any employment taxes. They wouldn't have to file a return. They wouldn't be getting any notices from the IRS. And so that's the huge downside of issuing a 1099. So if you have a child that's working in your business, you have a parent-owned business, it's imperative that you set them up correctly as W-2, pay them the right way so that you don't run into issues with the IRS down the line. Like we said, there are some legal issues there. Also legal issues if they're considered an independent contractor versus a W-2. They could lose some like unemployment insurance or workers' compensation benefits. Moreover, as we mentioned, if the IRS comes back and determines that they were misclassified, then that could subject you to some penalties and interest on your side as well. Some steps here to take. Number one, classify your children as W-2 employees and pay them that way. Understand those tax benefits. If they're under 18 working for a parent-owned business that's not an S corporation, then they may be exempt from the Social Security and Medicare taxes on that income. And if they're being paid under the standard deduction for the year, then they don't have to file an income tax return. Now, it's important to kind of pay attention that if you're filing them a W-2 and they're under that standard deduction, but you've withheld income taxes on them, either federal or state income tax, they don't really owe that tax if they're under the standard deduction. And the only way to get that tax back is that they now have to file an income tax return and get a refund. So if your child is under 18 working for a family business and not going to be subject to income tax, then be careful about withholding income taxes on them. Otherwise, you're going to have to file a return to get that refunded. It's also very important to keep very detailed records for children that are working in a business. They need to have their job duties listed out, what they're doing, the hours that they've worked, and their compensation, how much they're being paid per hour. And what they're being paid per hour needs to reflect what's going on in the general market. They can't be coming in and cleaning an office and getting paid $1,000 an hour to do that. It's got to be something more in line with what's going on in, what you would pay someone else to come and clean your office, basically. So those are the important parts of hiring your children. Make sure that you get that set up correctly. If you have questions, please comment below. If you're interested in getting more of these updates, please like this video, hit the subscribe button below. We'd love to have you as a subscriber to our channel. And if you're looking for more tax education, more knowledge, we do send out a weekly newsletter. If you go to taxtutor.com, you can sign up for our weekly newsletter there. And if you're looking for even more education and more help, we have an online community. It's an online school community where we connect with business owners. It's a place where they can come and ask questions. We give answers. They can connect with other business owners there. We do some trainings. And we also have an online course that's inside of that program that walks through all of these things like paying children and other things that's available there. And you can go and dive into the details and learn more there. So we look forward to seeing you in our school community.